Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at three stocks which are currently high on the bulletin board's popularity stakes. The first is Plexus Holdings, which is a personal favourite of mine, largely on the basis of the unfilled gaps to the upside made during July through the 200-day moving average, which is currently at £2.32. There's also a multi-tested RSI support line from July as well, which is normally gives the price action a decent backbone. And we have had attempts to fill the last gap down to £2.29, and all of them have so far failed, which is also a show of strength in terms of the technicals. The view at the moment that I have is that while the floor of the July rising trend channel at £2.62 remains in place and support at the 50-day moving average backs it, we could be looking at a new leg to the upside, risking say 10-15 pence at the moment from current levels and looking up to the top of the channel at £3.20. So a decent looking setup there at Plexus, and pretty well cut and dried money management area as well for the shares. Moving on to another situation which is in focus at the moment, Empyrean Energy. Sorry, I can't even say it at the moment. Here we have a recent cross between the 50-day and 200-day moving averages in September, and an overall rising trend channel from the middle of 2011, based at the 200-day moving average at 6.36 pence. Recent price action there really looks like a bull flag situation, and one would expect to see progress within this 2-year rising trend channel for Empyrean at over the next 3 to 6 months. If you're cautious, you wait for a weekly close above the recent resistance at 8 pence. Otherwise, going long with a stop loss towards the 6 pence level is the favoured strategy. The target 11-12 pence for the first quarter of 2014. Finally, I'm finishing off with an area and a stock which I have a soft spot for. It's a chocolate retailer, Thorntons. Although I prefer the hotel chocolate chain or chocolat chain, Thorntons is obviously also quite successful at the moment. We've had a massive rally here for the shares over the past year. I think I spotted this opportunity around the 40 pence level, or maybe a bit lower actually, here on Spreadbet Magazine at the start of the year. And really since then it's been almost one way all the way for the bulls, within a rising trend channel and well above the 200-day moving average, currently at 86 pence. The situation at the moment, we've got a decent breakout through the initial December resistance. You'd be going long or staying long even at current levels, looking for further upside. The best case scenario on offer here is the top of the October trend channel from last year, as high as £1.75. Only if you're cautious would you wait for the 10-day line to catch up, or the shares to sort of back off a little bit towards £1.30 in order to improve your risk reward in terms of going long. But this looks like a runaway move to the upside. Good RSI support line backing there as well. Recent bounce off this line over the past week. And so really the only slight hiccup is the fact that we are so overbought at 81. This, as I said, this looks like a momentum situation and a runaway move which is unlikely to slow down anytime soon. That's it for me. See you again next time.